Hello everyone, welcome to tonight's presentation. Super excited for everything that we'll be talking about tonight. So I'm gonna get us started with a quick video.
Around the world continue to struggle with money and financial illiteracy.
It's Madison Avenue manipulation, right? It's been going on for years and we buy into it.
How bad is financial illiteracy?
It's not taught in school, so people don't know this naturally.
Oh, you're right.
So you grow up not knowing anything about it. You make a lot of mistakes along the way, and we're hoping to educate them and teach them how money really works so they can learn the cause and effect of all this.
And it doesn't have to be generational.
Exactly,
No.
exactly right.
Break that cycle.
Once you understand the basics of financial literacy, it changes your life. The secret is financial literacy. I mean, teaching your kids how money works. I think it's really understanding how money works. Once they understand the basics of how money works, they shouldn't have to struggle for very long.
Steve Siebold and Tom Matthews are the authors of How Money Works. Stop being a sucker.
Money means possibility. It means opportunity. It means freedom. Things you've always wanted to do, dreams that you have. Money makes it possible.
You know, of all the interviews we've had in the last 6 weeks, I'm actually most encouraged by that one.
Yeah, so welcome again everyone. So super excited to get started today. My name is Shantae Moore, for those of you who do not know me. Sorry, I have a lot of windows open that I'm trying to close real quick. Okay, good. Again, Shantae Moore, certified financial educator, my How Money Works educator, and I'm really excited to host tonight's workshop, which is called How Money Works, the Elements Presentation for Protection. And this course is based on our groundbreaking book called How Money Works, Stop Being a Sucker. And this particular book has over 500,000 copies in print. And I've been in the financial services industry for the last 16 years. This is actually my 16th year. And I would tell you this, that in my experience in working with clients one-on-one, you know, hundreds of clients or hundreds of people that I've actually met with, you know, I'm always looking for resources to share with folks. And I will say that this book is the best book about personal finances that I've ever had. Super easy. It's literally built for anyone from age 8 to 80 to learn about money, to learn financial concepts. It's really not only learn it, but to take that information and apply it, you know, because we hear the term knowledge is power. I believe applied knowledge is power. And this book has been everywhere. This is a very well-known book. It's been on CNBC, CBS, ABC, Fox. You saw in the video a lot of news interviews, a lot of articles have been written about it. You can actually get it on Amazon for $16.99. But for those of you connected with me, if you're watching this presentation, whether you're joining me live or you're watching the replay, however you got to connect with me, reach out and I'll be happy to send you a complimentary copy of the book. No obligation. I just want to make sure that you can get this resource in your hands so that you can learn about finances. I only don't ask for it unless you're actually going to read it. I want to make sure that it's not going to be a coaster on your table. So just to get started into our workshop for tonight. So our class is titled Protection. And this is the third class of a series of 5 workshops, again, called our Elements Workshops. You know, again, if you haven't seen these other workshops, it's totally fine. All the information is individualized. So, I mean, it's not cumulative. It's fine that you're only listening to this protection session if you haven't heard the foundation or concepts. You know, the information is independent of the other sessions. But anyway, through these 5 workshops, we really talk to folks about different areas of their personal finances that they really don't think about, or they do, but they don't know how to address them. And so with protection, you know, we're talking about shielding your income, your health, and protecting your future. protection is actually one of the money milestones that we teach about, which is a 7-step process to help folks, again, get their finances in order. So when it comes to having proper protection, milestone number 2, super important. I actually tell clients, when I'm working with folks for the first time, I tell them this is what you should be addressing first. Not trying to invest in the stock market, not trying to, pay down your debt, which obviously you'll do, but you need to make sure that you and your family are properly protected. And anytime I say the word protection, I'm talking about insurance, all things insurance, life insurance, health insurance, maybe disability insurance, long-term care insurance, and having long-term care coverage. These things are all super important because you never know, insurance, when you think about it, protection protects the what ifs. You never know if you can get sick, or if you lose a job, or you lose, your savings for whatever reasons. You need to have protection in place. We get insurance on our cell phone and TVs and our vehicles and homes, but we want to talk about why not protecting yourself in case you were to pass away prematurely. And you don't want to leave your family behind without your income, because your savings, it might not be enough to take care of them. It could run out. So, and I'll say, again, I mentioned protecting yourself is the best and the most important property that you should actually be protecting. Here, as Thomas Paine put it. And you might not be able to fully protect yourself from illnesses or accidents, but you can protect your income as well as protecting your wealth. And ironically, that protection is called life insurance, like I mentioned. This is a defensive strategy that's motivated by a sense of love and responsibility. I have plenty of life insurance in place because I want to make sure that my loved ones, in particular my children, I take care of that responsibility, and that they'll be able to, maintain the same lifestyle that they've had, prior to anything happening to me. And so when, the first thing that I always talk to families about is, well, everyone knows that they need life insurance. They just don't know how much. And I think that's a question that we need to figure out. How do you calculate that? And obviously the answer is different for everybody, because your situation is different from, mine or anyone else's. So there should be a unique calculation to yourself. But I would say, as a rule of thumb, we recommend that you have at least 10 times your annual family income in life insurance coverage. So for example, here, as you can see on the screen, if you earn $50,000 a year, you should consider having $500,000 in coverage. We believe that if you were to pass away, your family received that $500,000, that they'll be able to, hypothetically reinvest that money and withdraw at a 5% rate, and that will replace it. That money will keep coming in, and it won't run out. So for a more specific calculation, because I don't think, that's the baseline, but I think you should have a more specific calculation where you're factoring in, how old are you? What debts do you have? So not everybody has an income. What if you're a stay-at-home mom? That means you still need life insurance coverage. You actually probably need more than anybody else. But also considering your health, what does your family size look like? How many dependents do you have? Also, people get life insurance to protect their business. What if you're in business in a partnership with someone else and one of the partners pass away? You want to be able, again, to provide coverage so that that business can stay afloat. So many people like here, they didn't know that, 10 times their income was just the starting point, for protecting their coverage. And it can sound expensive to the other example on the screen was a $1 million policy, because you had $100,000 income. But, I don't ever want folks to really think, automatically assume this is super expensive. Because one thing that folks don't really realize is that, they actually overestimate the cost of life insurance. First of all, they underestimate how much they need, and then they overestimate how much it'll actually cost. Most folks, I would say a good majority is, not a good majority, I would say a good percentage of folks actually do have some type of life insurance coverage in place. And I'm not talking about anything at your job. I don't consider that actual coverage, because you could leave your job and there goes your coverage. But I would say a good majority of a small good percentage of folks actually have some type of life insurance, but they typically only have a fraction of the amount that they actually need. You know, if they actually did that 10 times calculation, they'll probably have maybe 1 times, you know, what they actually need. Only 59% of Americans currently have life insurance, and about half of those are underinsured because of that exact reason. They purchase it and they think, oh, well, I got life insurance, I'm okay. And it's like, no, you don't have enough. And that's something you should actually sit down with a financial professional to talk about and to determine, you know, how much do you need? Ask some of these questions here that are on the screen, like, you know, what are your debts that you have? Because you should have enough coverage to take care of any debts that you have. They don't disappear just because you pass away. You know, what is your mortgage? You know, is that something you want to have taken care of? Would you like your mortgage to be paid off? You know, so your family doesn't have to worry about their home. And again, what about leaving a legacy for any children or grandchildren? So just like, you know, with so many things in life, you know, life insurance, it can seem complex at first because there's so many options, there's so many types of policies. But, you know, once you start to get a little bit of education and increase your literacy when it comes to life insurance, it'll be easier. So for the next couple of slides, I just really want to break it down and explain the different types of protection coverage you can have, which basically only falls into 2 categories, which is temporary, and then there's permanent insurance. So first, let's just look at the term life insurance, again, also known as temporary insurance, because term insurance only provides coverage for a specified period of time. So if you're getting coverage for 10 years or 20 years or a 30-year time frame. And this is actually the most affordable type of life insurance because, number one, you pay for the core benefit, which is having the death benefit available. You know, a death benefit is having money paid to a beneficiary when the person whose the policy is on passes away. But it's also affordable because at some point this policy term ends. So you're not going to have it, you know, typically you're purchasing it for that time, that 10 years, that 20 years, or 30 years. So this isn't lasting you your entire lifetime. So again, that makes it affordable as well. And with term life insurance, I really like it because it's a really great solution for folks who have a pretty big insurable need, but they have a smaller budget. You know, if you're, and this is why I say, like, I don't care how much money you have, you know, you can definitely find an affordable term life insurance policy, and more than likely one that has enough coverage to meet you and your family's needs. Literally, depending on your age and health and obviously how much you buy, you qualify for, you could be paying like $10 to $20 a month, you know. You can find $10 to $20 a month. You know, it's a very affordable plan, you know, for folks who have the need, the high responsibility, but maybe a smaller budget. So the one question that we often get asked is, okay, well, what happens when that term ends? You know, because I probably will live longer than 10, 20, or 30 more years, right? Well, there's 2 scenarios when that term comes up. So first of all, the scenario 1 is that, well, maybe you don't need coverage anymore. Maybe you have no debts. Maybe you have no one who's financially responsible to you. Maybe you have plenty of money saved so that, you know, your funeral can be paid for, and you have money left over to leave to other people. In that case, then your policy will just end and then you won't have anything else. So the benefit was that you had the coverage, you know, while the responsibility was there. Now that responsibility is gone and changed. Now you don't need the coverage anymore. So that could definitely be the case. But what if after that term ends, you actually still need the coverage, which is the scenario for a lot of folks. It's not like they, you know, don't need or have a need for the life insurance. 99% of the population still does. Maybe because you're still, you know, paying off your home, or you're still, you know, have young children, or maybe, you know, you're surviving off of one income. Those are reasons, or maybe you could even be in business for yourself still. You're still running a company. So those are reasons why you might consider, scenario number 2, which is actually keeping the term insurance. So when you have in good health, when you have good health and you have on your term policy, there's what we call guaranteed insurability, to where you might be able to renew your old policy, but now you can actually, restart a whole nother term. So most term insurance policies has that feature built into it. But this is the thing. Would it make sense to restart another 10 or 20, 30-year term? Because first of all, remember, if you want a whole new policy, if they don't have that guaranteed insurability, you'll have to really qualify for it again medically. Just because you got approved 10 years ago doesn't mean you'll get approved 10 years later. You don't know how your health might have changed during that time. And it could be to where you can't get a new term policy because of that particular situation, because you couldn't qualify, or maybe it's too costly because, 10 years younger, 10 years healthier ago, now, you're 10 years older, and who knows what your health will look like. So it might not even be something that you can even afford, even if you do qualify. The older you are, typically the more expensive, any new policy would be. So when we think of these scenarios, this is kind of what we talk about and educate our clients on, is the financial X-wave. Because in your younger years, here on the left side of the curve, not only are you younger in age, what comes with that is typically having more responsibility. You have kids, you have the house, you have, all type of debts, you have mortgages, you have a lot of responsibility. And typically in that phase in our life, we also tend to have less wealth. We have a lot of responsibility, but little to no wealth. As we get older in life, the kids get out the house, you pay down most of your debt. Maybe your mortgage is almost paid off. Now you're older. Our responsibilities, theoretically should decrease, and then our wealth increases, because now, we should have been saving and investing over that time as well. As you become older. So term insurance is typically most useful when you're on the blue side of the curve, when you are younger and you have more responsibility, but your wealth is lower compared to the left side. And then if these two factors flip later in life, as we hope that it should, then term insurance doesn't actually become practical, because again, you'll probably outlive the term and you'll be paying too much for it at that point. So this is what, we help clients to look at and understand is, okay, at some point term insurance doesn't make sense. That's when we should look at probably considering permanent insurance. So with permanent insurance, so just like term, it provides a death benefit, to protect your family financially. So if something happens to you, they get a nice, check from the insurance company. However, permanent insurance is designed to be kept and to protect you for your entire lifetime. Most life insurance companies right now will provide coverage for you for up to age 120. So think of permanent life insurance as a lifelong strategy that not only protects your family today, but it secures your wealth in the future. And it'll definitely have coverage where you can have, leave a legacy at the end of your life after you're gone. So there are 3 important benefits that I always talk about when it comes to permanent insurance. And again, term insurance has its benefits as well. They all serve a purpose. Which one makes sense for you, it just totally depends. So when it comes to the permanent life insurance, number one, again, you get the life insurance protection for your entire life. So you don't have to worry about, if I pass away at age 40 or age 80, the coverage is there. The second benefit is that with most permanent insurance policies, in most insurance companies, they allow you an option to add a long-term care rider to those policies. And I'll talk a little bit more about that, about why that's important and why that's something you might want to consider. And then number 3 is your accumulated cash value, which can give you flexibility with the premiums. This means that if you can't pay for some reason, then the policy would just pay itself out of the cash value that accumulates inside the policy. So other benefits that you can be included on this type of permanent life insurance strategy, in particular, this is a very unique strategy, is that one, you can grow that cash value with absolutely no market risk. It's not invested in the stock market. You get that long-term care coverage that I'll be talking about in a few slides here. You can get tax-free growth because, again, you have cash just growing inside the plan tax-free, which is great. You don't have to pay any taxes while it's growing. And you're actually able to pull that out as tax-free income later down in life as well. And then ultimately, if you pass away, then your family will get that death benefit completely tax-free. So taxes, as you can see, is a big word here on the screen, because avoiding taxes is extremely important to consider, because it can directly and significantly impact how much money that you'll be able to have in retirement. Also on the amount that you'll be able to leave to your beneficiaries, to your heirs. So I want to talk a little bit more about that cash value component of a permanent life insurance and why it is so important. Because when you have a permanent plan, you're paying monthly premiums. Typically, you're paying for this every single month. And a portion of that monthly premium is set aside in an account that grows over the life of your policy. And the money in that account is what we call your cash accumulation. And you can actually use that money to fund, future purchases. You see a few possibilities here on the screen. In addition, again, like I mentioned just a moment ago, that cash accumulation grows, with no market risk. So it doesn't care what the market is doing. You can still get, it won't negatively impact your cash value. You'll get that tax-free growth. You have that tax-free income. And then that legacy, again, legacy is super huge and important. And life insurance cash value is also creditor proof. Meaning creditors can't come after that cash that's accumulating inside the policy. So when you look at all these benefits together, this is a super powerful strategy. And it's something that I tend to talk to my clients about if it's something that makes sense for them and fits within their budget. So I wanted to talk a little bit more about long-term care, because I think this is super important when it comes to protection and a very big hot topic right now. Because as I mentioned, long-term care can be added to a permanent life insurance policy as a rider. So I want to just talk about the importance of having that type of coverage for a moment. So you may not know this, but 70% of people age 65 and older will need some type of long-term care services and support at some point in their lifetime. So in other words, statistically, you might actually need it. This might be you. I hope it's not. Maybe you're one of the lucky 30%. But here's the thing. Only 8% of people over age 55 have previously purchased some type of long-term care coverage, insurance coverage at some point in time. So I think that's a really big, statistically, it's a big statistic that we need to be concerned about. And so long-term care insurance, let's just talk a little bit about what that actually is. And so when you have long-term care insurance coverage, this helps cover out-of-pocket expenses that can really add up when it comes to needing long-term care help and long-term care assistance in the future. So you can, if you had a long-term care benefit that you were receiving from a life insurance policy, this is money that you can use to pay for qualified services like nursing home care or home health care or assisted living or adult daycare. And again, you never know if you might need it or when you might need it. You can say, well, I'm young and healthy now. Yeah, it's just, there's a likely chance you won't need it now, but what if you get a little older or something happens? Because if you need it, if you need that coverage, the average long-term care need statistically, if it's more than a year in coverage, it actually lasts 3.9 years. So as you can see here, the average total cost can be extremely expensive. If you don't have coverage from some type of insurance to pay for those things. I mean, do you have the money saved to pay for this stuff out of pocket? I tell the story all the time. I had a client that I was working with who had over, I don't know, about almost $1 million in an investment account. She was a single woman, saved all her life, obviously diligently saving. And she became older in life. She needed long-term care. And she ended up, because of her lifestyle, she was in a very nice, luxurious nursing home. She had a private room all to herself. And she was literally paying at that time, this was over 10 years ago, she was paying about $8,000-9,000 a month out of pocket because she had the money. She didn't have any long-term care insurance, no type of coverage at all. So she was paying for this out of pocket on her own. I remember talking to her on the phone, and she just told me, like, I didn't save all this money my entire lifetime to go to a nursing home. But she didn't have any other options. So, it was literally draining all her savings that I'm sure she would have rather had went to some heirs or other beneficiaries, other loved ones in her life. So there are a couple long-term care options that you should look at, because you're probably like, all right, Shantae, I get it. How can I get this taken care of? Well, first of all, you could purchase, what we call a traditional standalone policy, where this is not a life insurance. This is an insurance policy specifically and only for long-term care. And this isn't tied to life insurance. So even if you don't have life insurance, you should be able to go directly to an insurance company to purchase this type of standalone long-term care policy. Or the option, what I recommend, is that you can actually opt in to add a rider to your current permanent life insurance policy, or if you apply for a permanent policy, to add it in while you're applying. And you can, typically there is an extra cost, obviously, for that rider, but it's not a lot. I mean, we're talking about maybe a couple extra dollars per month to get this coverage that you want to have it versus not have it. I'll tell you that for sure. Because let's look at this. Let's look into these a little more. So if you go with option one and you buy a traditional standalone policy, there's a couple things you should know. So first of all, the premiums, the monthly premium that you pay, they actually start out low. But insurance companies can and typically do raise the rates. So let's say you're paying $300 a month. Don't be surprised if they increase it to $350 and $400, and it keeps increasing. It's not like they'll increase it once. They'll keep increasing it. Also, you usually still pay for, your care up front out of your own pocket. So let's say you qualify for long-term care, you actually needed it. You'll still have to pay out of pocket up front and then get reimbursed later, by this particular policy. And that could be hard. Like you have the insurance, so you don't have to pay for all these things and then later wait to get reimbursed. A lot of people probably won't have the money to do that. So another thing to keep in mind with these type of policies is that you could get a policy, put all this money into it, because you're paying the monthly premium. And then let's say you're, again, one of that lucky 30% who doesn't need long-term care. You don't get your money back. It's not like they'll refund you and say, oh, well, you grew old in age and you didn't need it. Here's your money back. No, they don't. So it's like you're putting something, if you were to go this route, you'll be putting your money into something that you wouldn't be able to get back. Or you can go with option two, like I recommend it, where you could choose to add a long-term care rider to a permanent life insurance policy. Now, a key advantage of this option is that the life insurance companies typically don't raise rates for life insurance policy holders. Once you're locked in, you're locked in. They typically, could they raise rates? Yeah, it's an option, but they typically don't. I mean, in my years of experience, I haven't seen any of the companies I work with actually raise their rates. And then some insurance companies, after having a waiting period, they'll pay you the money to cover your long-term care expenses, which you can spend however you see fit. So it's not like you have to come out of pocket with all this money and then get reimbursed. After you meet that, past that waiting period, you'll get the money, automatically. And then you don't have to submit receipts. You don't have to, keep up with what you're spending it on, just to make sure you get a reimbursement. Because there are no, there's policies where you don't have to do any type of reimbursement thing. So when you couple your life and long-term care protection, that's really the way to save. You kill a lot of birds with one stone. And then again, if you're one of those 30% of people who end up not needing long-term care at all, any type of coverage, then your premiums that you put in, they're not wasted, because instead you still have life insurance coverage. So your family will get that tax-free death benefit. And so another thing I wanted to kind of highlight too, as I start to wrap this up, is that there's other benefits, other beneficial living riders that you can add on to certain type of policies. Long-term care riders aren't the only ones that are available. There's typically several types, but I also implore you to, if you're looking to, get to any type of coverage, look for policies that give benefit, other living benefit riders, like critical as well as chronic illness riders, because those can definitely help you if you have any, of these health challenges like you see here on the screen. Like, have you seen folks have a heart attack, a stroke, cancer, get diagnosed with cancer, diabetes, Alzheimer's? Like, these are common, diseases that can happen. These are very common health challenges. And if you actually were to become diagnosed with one of these, it'll trigger those living benefit riders. So you'll be able to access money from your policy and can use it to take care of yourself and recover. So again, if you work with a financial professional or a trusted life insurance agent, these are the things that you want to talk about. Ask them, does their insurance companies that they work with or offer these type of living benefit riders. Some of these, even if you add them to a policy, again, they're super inexpensive. It's worth it to add them. And some insurance companies actually add them at no cost. Some of the ones I work with, they don't even charge you to add that in there. So as I kind of wrap up tonight's presentation, our mission is to teach 20 million families how money works within the next decade. We believe in stamping out financial literacy in all communities. I know that's why I'm so passionate about my work, because, the Black and Brown and Native communities that I represent, very rare are the opportunities where folks are really becoming financially educated. And that's a huge undertaking, to try and reach the masses. And I want folks to know that I'm looking for individuals to help me, who want to join this mission and become a How Money Works educator, just like, what I'm doing here. If that's something you're interested in, please reach out. I would love to have a conversation with you. We're looking for as many folks as possible to come join this crusade and help teach, some of these classes. And that's where you can come in. Or if you know somebody, maybe you're like, what, that's not my thing, but I know somebody else, then send them my way as well. I would definitely love to connect with them. So as I kind of wrap up tonight's workshop, I want you to just think about, which concept or which, of this stuff that you learned, what resonated with you the most, because we want folks to really just take a step back and learn, not only learn, but to think, man, I need to take action. I need to do something. And that's part of the work that we do here, is just that by attending, these webinars and being connected to me, myself being a licensed financial professional, I'm actually able to help you, implement anything that I teach and talk about. So like tonight was all about having proper protection and life insurance and getting that long-term care coverage. Those are things that I can help you with, because I am also a life and health insurance licensed agent as well. And so one of the ways that, my team and a company, how we help clients is obviously going through the 7 money milestones, which I mentioned, at the beginning of tonight, but also having folks just take a self-assessment, like look at what their finances look like. How do they currently stand? And we do that with this money discovery worksheet. It's in the back of the book. But if you're interested in getting a PDF copy of this, I do have it. It's a typable form. I'd be happy to email that to you. Just reach out to me and let me know. Because we want to give folks opportunity just to look at, okay, this is what's going on in my finances, so that you can work with a professional like myself and we can help you fill in any gaps and make sure that you're taken care of so that you can improve your finances. That's the whole point. So again, I'll be happy to sit down with you, if you're interested in having a consultation. I do offer complimentary Zoom consultations, just so I get an idea of what's going on and see how I can help. And again, helping you to start putting your money to work for you, help you with the life insurance, investing, whatever it is, definitely can help any of those things. So as I close out, if you like what you learned tonight, and you would like more information, again, reach out to me directly, however you connected with me for tonight's webinar. Also, if you're on Instagram, follow at How Money Works Official. This is our official Instagram page. We're always sending out practical tips and helpful resources. You can actually follow me on Instagram. I am at Shantae W. Moore. Also sharing out financial practical tips and resources all the time. So again, happy to help anyone. I hope this short presentation was informational for you all. So have a good evening.